Hi everybody, Thomas Moore here. There's a common misconception about the stock market. It's a corollary to the idiom, it takes money to make money. And it takes that simple logic and twists it so that average investors think it takes a lot of money to make money in the stock market. It's one of the reasons that most investors starting with small accounts tend to take oversized risks, betting on penny stocks, buying stocks on margin, or using long call and put option strategies to swing for the fences. It's easy to get caught up in the idea that if you want to build real wealth in the market, you have to be super aggressive. I found this misperception even more prevalent when I start talking to people about generating practical income using conservative strategies like put selling, covered calls, and owning dividend-paying stocks. I've even made the mistake in my own professional life in the past of feeding this misperception and recommending clients shouldn't use the strategies I've built my Rebel income system around unless they have at least $50,000 in investing capital. In this video, I'm coming clean, and I'm declaring all of those notions for exactly what they are, complete garbage. To be clear, it is true that if you are working with a larger account, you can generate more income with a greater range of choices and flexibility available to you. What I want to do in this video, however, is to disconnect our mindsets from the idea of how to generate enough income to live on from the stock market and connect it to the reality that even with a smaller account, it is possible to generate enough income to make a difference in your daily life. Now, I'm not going to throw hypothetical numbers on the screen to demonstrate my point. Instead, I'm going to show you a real account I'm using with real numbers from my own investing results. Before we dive into that, however, I want to ask you a simple question. What could you do with an extra $175 per month? I know $175 doesn't sound like a whole lot, but if you're like most people, living paycheck to paycheck while supporting a family, an extra $175 per month can make a difference. It could mean an extra trip to Costco, full gas in the car for the month, the ability to pay for prescriptions, or the opportunity to build your savings. Now, I'll bet you're asking why I'm using $175 per month rather than a round figure like $200 or maybe even more. The reason is pretty simple. The account I'm going to show you is a real personal trading account I recently set up by moving money from a previous employer's 401k into a rollover IRA account. It's not a large account. It's a little less than $7,000 when I made the transfer. The first trade that I made in the account was on December 4th, 2023, and as of January 5th, 2024, just a month later, I had closed 2 positions for a net gain of $175, a little over 2.5% return on my total account size for a month. Now, I didn't do anything remarkable or difficult, and in fact, the activity I used to generate that money is available to any average investor with a funded brokerage account and the appropriate trading permissions. Now, there are a few details I should make clear before we dive in. First, the account I'm about to show you is a rollover IRA account, meaning the money that I'm working with is designated as qualified retirement money for tax purposes by the IRS. That means that the money I'm working with and the income I'm generating from it aren't available for withdrawal until I reach the age of 59.5 years at least. I'm not there yet, so in my case, this is money I'm simply using to build up the account as much as possible. If you're working with a similar qualified retirement account, you may be under the same restriction. But even in that case, a 2.5% return on investment per month translates to a 30% annualized return. That's a great result for any account because it represents real growth that will help you achieve your investing goals over time. If you're working with a regular non-IRA or retirement account, the income you generate from your investments can be used any way that you want. You can reinvest it, withdraw it, or simply leave it in cash in the account for future use. In order to place the kind of income generating trades I'm about to show you, you will need to make sure your broker has approved your account for at least level 1 options trading. That is the simplest options trading permission to get, and it will allow you to sell covered calls against stocks that you own. Check your broker's website for information on getting that permission if you haven't already, or consider calling them directly for help to get the process started. The last caveat that I'll add is that the size of each position you take is critically important. This is just as true of large multi-million dollar accounts as it is of small accounts like the one that I'm about to show you. Plan to be conservative with the sizes of the positions that you take, and avoid the temptation to make sure your account is fully invested in the market at all times. Leaving money in cash doesn't mean it isn't working for you, especially if your broker pays interest on unused cash. Even without interest, unused cash helps to preserve financial flexibility, limits exposure to risk, and gives you the ability to think more objectively about the positions that you are working with. This is a screenshot of the trading activity that took place in my account from December 4th, 2023 to January 5th, 2024. Note the starting balance in the account at the bottom of the screen. It's a little under $6,900. The new account balance on the left side is the new value in the account after the trades I placed during this period have cleared the standard settlement process. The difference is $173.62. Let's break down each trade. My first trade was in a banking stock, KeyCorp, stock symbol KEY. I bought 100 shares on December 4th at $13.29 per share and immediately sold one call option against the stock that brought in a total of $34.33 that was deposited as cash in my account. Doesn't sound that impressive, right? The key for this trade is to consider that $34.33 against the $1,329 that I paid to buy the stock. The call option expired on January 5th, 2024, meaning that the covered call trade covered a 1-month period of time. $34.33 divided by $1,329 is 2.58% for that 1-month period of time, and that I was paid for immediately. Next, I bought 100 shares of Coterra Energy, stock symbol CTRA. That's an energy stock. I bought it at $25.45 per share on December 5th for a total cost of $2,545. My covered call, placed the same day after I bought the stock, put a new immediate credit of $48.33 into my account as cash. Now, this trade covered a shorter amount of time, since the call option expired on December 22nd. In this case, the $48.33 I brought in with my covered call trade meant that I was paid 1.89% for about 2 weeks worth of time. That's a lower yield than for my position in Key, but also covering about half as much time. Both of these trades are excellent examples of the kinds of income that is available at any time in the stock market to traders who are ready to look for them. The next entry in the record is on December 26th, after the call option trade on CTRA had expired. It shows that I sold my shares in CTRA at $25.50, the contract or strike price associated with the call option that I sold. After brokerage and processing fees, I made about $5 total on top of the stock sale. That's not a ton, but it's also a result I was ready for when I sold the call option. The strike price of the call contract sets an absolute limit on how much money you'll make from the stock if you have to sell it when the option expires. In this case, the $48.33 or 1.89% I brought in up front for selling 2 weeks of time made the minimal capital gain more than acceptable. On December 29th, I received a $15 deposit, which was interest earned on the cash in my account for the month to that point. Not a large amount, but that gets added to my total gain for the account as well. On January 5th, I sold the 100 shares I had purchased in Key at $14 per share, which is the contract price of the covered call trade I had placed. That added a gain of $70.98 to my account, on top of the income from both covered calls, the sale of CTRA, and the dividend received from the unused cash in my account. So where does that leave me? Let's run the numbers. For KeyCorp, I made a total of $105.31. For CTRA, my total gain was $53.30. The total dividend was $15.01. Altogether, the sum total of all of those transactions was $173.62. I often talk about picking the low-hanging fruit of the stock market. Individually, none of these trades look particularly impressive. But when you add them together, you get a very real return on investment of 2.52% for 1 month of time. Now, I ended up selling both of these stocks, which is commonly described as being called out, and that won't happen every single time you work with covered calls. That's okay though, because if the stock doesn't move above the call strike price by expiration, you keep your shares, and that means you get to look for a new covered call trade. Called out or not, that makes the net 2.52% result that I achieved for the month very realistic and even repeatable. Assuming I can duplicate that result every month for the next year, that means I could realistically see a total of $2,083.44 of very real income generated in this very small account of a little less than $6,900 to start with. If I leave it in the account, that means the value of my account will increase to $8,969.25. That's more than 30% growth in the account in a year, which again is a repeatable result year after year after year. I should also note that in some cases a stock may drop significantly below the price you bought it at. Now that can be a hard thing to watch, especially if it takes a stock a year or more to come back to the price you bought it at. That's why I put a big emphasis on buying fundamentally strong stocks that also pay dividends. Fundamental strength doesn't mean they won't go down, but it does increase the likelihood it will recover over time. And in the meantime, the dividend distributions provided an added income source that my simple example didn't include. Remember also that even in a downward trend, you can keep selling covered calls, which allows you to keep generating income on the stock on top of those dividends. It also improves your net result over time and makes it easier to wait for the stock's price to recover and go back up to what you paid. If your investing objective is long-term growth, you might be thinking something like, well, all of this sounds nice, but I'm trying to build my nest egg for retirement. I need more. Remember, what I've shown you is a realistic, repeatable result under any market condition. Duplicating this result consistently, year after year for the next 20 years, means that my small account, starting with less than $7,000, will grow to a little over $1.3 million. That's real growth, folks. And it isn't based on blind hope or low probability, high risk trading strategies. All you have to do is to find companies you're willing to own and then use the simplest, most conservative option strategy on those stocks again and again over time. I've built my Rebel Income investing system to take advantage of the strategies I've just demonstrated in my own small account. Picking up the low-hanging fruit of the stock market from dividends, covered calls, and other strategies like put selling puts me at a significant advantage compared to the average investor, and it's an advantage I'd like to share with you. You can click here to subscribe to this channel, where you'll get notified about stocks I highlight and videos like this one to learn more about the details of my system. If you really want to see what I do and how I do it, check out my Patreon page and consider signing up for my Rebel Income Toolbox or trading alerts. You'll find the link in the description area for this video. Thanks for watching. This is Thomas. Talk to you again soon.